So you are an IPO specialist. Are you guys tracking the IPO for OpenAI just as closely as everyone else is in the tech sector right now?
Absolutely. AI is a huge theme in the IPO market right now. It has been for maybe the last couple of years, but has definitely grown in scale. And the looming OpenAI IPO is certainly on our minds right now.
Now, so we reported today on this funding round for OpenAI, $100 billion. It's nearing its final stages of coming together. They've got initial commitments from investors. The question I want to ask you to start with here is, to what extent does a funding round like this make it easier for them to delay an IPO? I mean, we've reported that it could be as soon as the fourth quarter of this year. Does this give them more leeway here? Do you see them requiring the public markets for their capital?
That's a great question. And normally I would say that a huge funding round like this could absolutely delay an IPO. But I don't think that will be the case for OpenAI for two reasons. The first being that given how much capital a company like OpenAI requires, um, tapping the public markets is going to be an eventuality. They're going to be eventually needing money from public investors, even with how generous private markets have been. And the second reason is maybe even more compelling, and that is pressure from insiders on liquidity. Private investors want to eventually, realize their return on investment, and the public market is possibly the easiest way for them to do that. Something that I think we'll also be watching for is dual class share structure. I think that will also be common with these larger IPOs, especially as some of the more visionary founders look to retain control, even when the company is public.
Explain that for us a little bit more for people who don't know dual class share structures, what the two classes offer, which ones have voting rights. Just unpack that for us a little bit.
Sure. Yeah, a dual class share structure implies two shares, two classes. There can actually be more than that. It really just depends on the company. But ultimately, what it means is that some shares have singular voting power. You own a share, you get a vote. But what we see sometimes, especially with these very kind of visionary companies, are shares that have outsized voting power. So that might be 10 shares per vote, 20 maybe in a more extreme case. We've even seen up to 100 shares per vote, even recently with StubHub. So that allows insiders, typically founders, to retain an outsized portion of voting power, even with maybe diluted economic ownership.
I want to go back to what you were talking about with the insiders selling shares and that being a theme for some of these big issuances. I mean, educate us here a little bit on how you end up tracking that, because I know there's a lockup period. I mean, does that end up having an effect on the stock price after the lockup period expires, or how does it end up affecting, the stock price ultimately?
Ultimately, in a traditional IPO, when insiders sell shares on the offering, what that means is that those shares are right. They're bought by the underwriters. They're distributed by the underwriters. So there is no initial trading by these insiders like there would be in maybe a direct listing. So the impact on the share price might not be tied directly to insiders selling shares as much as it would be public investors interpreting insiders wanting to dump their shares as possibly a negative aspect.
And so, in other words, I mean, is there any way for us to know which insiders are selling their shares in the offering itself? Is that sort of where reporting comes into play, or I mean, how do you think of that as a student of this space?
There are fears around AI, but a company like OpenAI or Anthropic, where AI is their business, there's no way to spin it that it's not. Um, that could definitely and very likely will definitely cause a lot of buzz, a lot of demand, and these will likely be very hot deals when they do come to market.